The unfortunate reality is that those hospitals that get targeted, they're in life and death situations. And so cyber resiliency is going to be something that it has to be an investment opportunity for these hospitals. And it's not just about preventing attacks.
We're now on the verge of a clean energy economy, and you can't go back.
The decision these private equity firms are going to have to make is, do they want this vintage to be an asterisk and move on so they can raise a new fund and get businesses at better valuations than they did in the prior few years.
Welcome to This is Digital, a podcast brought to you by West Monroe. Join us as we talk to leading experts about bringing the digital mindset to your organization.
Hi, everyone, and welcome to This is Digital, a podcast where we break down the latest digital trends and share tips on how you and your company can be digital. I'm Christina Galuzis, Director of Communications and Public Relations here at West Monroe, and I am so excited to be hosting the final episode of Season 4, which has a ton of forward-looking yet action-packed information in it for you today. I'm joined by my colleague and co-host for today's episode, Liz Moore.
Great. Thank you, Christina. Hi, everyone. I'm Liz Moore, partner here at West Monroe. I lead our strategic growth team, and I'm excited to be here and thrilled about today's episode. Today, we're diving into a topic that's really buzzing with excitement as we gear up for 2025.
This has been a year with so much anticipation, between the build up to the election and then the election results, kind of the changes now with what's going on with the Fed and their actions. A lot's going on with the geopolitical climate, and there's a lot going on with technology changes. So the last several months of 2024 are really setting the stage for a lot of change and some major shifts heading into 2025. I don't know. What do you think, Liz? Are you seeing the same thing?
Yeah, I couldn't agree more. It feels like we're on the brink of something big and these big shifts that people can capitalize and take advantage of. You can kind of feel the energy building in the market, and not just politically or economically. Every industry is really feeling the pressure and excitement to really adapt and evolve and understand what next year might look like and how they can take advantage of it.
Yeah, 100%. And so that is exactly what today's episode is going to be about. And it's really important for our listeners. And so we have brought together the leaders from our 7 different industries here at West Monroe that we focus on. And they are at the center of this change. And so the industries that we are going to dive into today and interview all of these leaders are energy and utilities, private equity, insurance, healthcare, high-tech and software, manufacturing, which we also call consumer and industrial products, and then finally, financial services.
I think what's really exciting is we're not just talking about the typical challenges. We're also looking at innovation, new strategies, what's really going to shape these industries in the next year and beyond, what's going to create the winners and set them apart from the rest of the pack. And if there's one thing we've learned, that you really can't stay stagnant.
Yeah, I couldn't agree more. I also want to say that, we're not just bringing these interviews. This is something that we do every year from a thought leadership perspective. In my role at West Monroe, overseeing thought leadership, we do this annually, these industry outlooks, because we are so deep in industry expertise. We publish these detailed outlooks every year. They're extremely popular. I think they're our most, download pieces every single year. So if you want to dive deeper into what is driving these industries, these reports are available at westmonroe.com/2025 outlooks.
Yeah, that's a great point. So whether you're working in one of these industries or really just curious about what the future holds, these reports give you the data analysis you need to stay informed. They're packed with insights that go beyond today's episode. So with that in mind, let's dive in.
All right, first up, we have energy and utilities with Paul Dakotas.
Paul Dakotas, senior partner here at West Monroe, out of our New York office, where I lead our East Coast energy and utilities practice.
And what would you say is the biggest trend happening in this industry right now, headed into 2025?
Yeah, I think the biggest trend in the utilities right now is for the industry to meet the unprecedented load growth expected to continue well into the next decade. This is a trend to watch and for which utilities, policymakers, and regulators need to step up to for meeting the challenge. And to give you an example, load growth from already planned investments in artificial intelligence, the proliferation of data centers, and the drive toward electrifying buildings and transportation across many states in the U.S. This growth is something we've not seen since following World War II. The growth is phenomenal. Data centers, for example, consume massive amounts of energy and require near perfect 99.999 levels of reliability, often referred to as 5 nines. This requires significant expansion of power generation and transmission and distribution infrastructure. That is not going to go away. And as electricity demand grows, distribution utilities like your local utility and power producers need to invest heavily to expand generation and transmission and distribution capacity. But the really challenge here is for regulators to enable and allow the investment while trying to keep customer equity and affordability in mind. Even if the federal government under the new administration pulls back, there are still 50 states with their own energy policy directives that will continue to drive investment in energy infrastructure. And this rapid growth creates uncertainty in load demand forecasting. And many regulators are already questioning and challenging these load growth assumptions.
Paul, are people starting to recognize this fundamental shift to a clean energy economy?
I think it's beginning to be talked about quite often, yes. If you think about the way the world evolved, starting with an agricultural economy, then we moved into an industrial economy. We're now on the verge of a clean energy economy. And you can't go back. Once the investment starts taking place and customer adoption unfolds, and not just individual customers, commercial entities, big businesses, you can't turn the spigot off. This is a cataclysmic change that changes the trajectory forever. And that's what I see. And I see a lot more people talking about this.
Okay, Paul, what is your big prediction for the utilities industry next year?
I've got a lot of little predictions. My biggest prediction for the industry in 2025 is that the industry is going to confront regulatory pushback. And that's going to be limiting revenue collection and rate increases to recover the investment necessary to meet the load growth that we're anticipating. I think we are beginning to see that now, and I'll give you an example. I am aware of circumstances where a regulated distribution utility, submits a rate request before its regulators, and they're seeking, let's say, a $75 million increase in revenue to invest in the infrastructure needed to meet this load growth. And this is a recent case where the regulators came back and the regulators were seeking a decrease of $45 million. So that's a big difference in what's required to provide safe, reliable electricity to customers. And this is unsustainable. It puts the utility at risk of not being able to access capital markets to meet load growth safely and reliably. It also sends the wrong signal to capital markets that utilities are no longer a safe investment or a safe haven as they have been historically, making it more difficult and costly for them to raise capital to support these investments. I do think, however, there is a potential partial solution to this. We are seeing some states, New York is doing this, Connecticut had proposed legislation to do this, but a lot of the clean energy funding that's being collected through utility bills is being used to support energy efficiency, renewable energy, battery storage, time of use rates. So the money's being collected to do a number of different things. And now governments and states are talking about using some of that money to offset the bills for low and moderate income customers. So that when you look at the need for infrastructure investment and the need for customers to pay these rates, there is a safe haven for low and moderate income customers to keep it affordable for them. So I think there is an opportunity here to address that. But I think the immediate trend that I'm seeing, and it's going to continue to play out in 2025, is the pushback from regulators. The load is still very uncertain. The costs are extremely high, and regulators don't have the appetite right now to keep increasing rates to cover these infrastructure costs. I do think that the change in Washington will have some impact in pulling back some of the investment, as I talked about earlier, particularly for offshore wind. But again, I think that's going to be slow to come about.
All right. Thanks, Paul. It's been a pleasure having you. All right. Now we are welcoming Keith Campbell to the podcast. Keith, please tell us about your role here at West Monroe.
My name is Keith Campbell. I'm a senior partner and I lead our mergers and acquisitions and private equity practice. I sit here in Chicago.
Great. Okay, so we are talking about predictions for next year and what's coming up for many industries that West Monroe works with. What would you say is the biggest issue that private equity firms are facing heading into 2025?
The biggest issue that private equity firms are facing coming into 2025 is they're getting pressure from their limited partners, or the LPs, as we call them in the industry, to return money and give them back some distributions before their next fundraising rounds. As it relates to selling these platforms, we anticipate a pickup in 2025, but private equity firms are going to have to make a choice. Do they want to take these businesses with a valuation that's not as great from an IRR standpoint? You look at the 2021 vintage when a lot of these portfolio company deals were done. There is a large amount of aging portfolio companies out there. And the decision these private equity firms are going to have to make is, do they want this vintage to be an asterisk and move on so they can raise a new fund and get businesses at better valuations than they did in the prior few years?
Keith, something we just asked Paul Dakotas is, what's going to separate some of the winners from the rest? And what's going to help a private equity firm win in 2025?
Yeah, I think in 2025, what will help a private equity firm win is they get back to taking this profitable growth on their portfolio companies and making operational improvement a reality and a motion that they're good at. I think a lot of private equity firms have had success in prior vintages, prior years, but most of the time that was because of strategies that will no longer work in today's investing landscape. And so these are new muscles, and the firms that are strong at operational improvement, at profitable growth, and at using data and digital to their disposal will continue to get alpha, and leaving some private equity firms struggling or in the dust.
Yeah, I think that's good. And what would you say then, Keith, is your biggest prediction for either M&A or private equity in 2025?
My biggest prediction for private equity in 2025 is that this is the year we finally see AI bring measurable results into portcos. And we've been pitching for 15 years now, private equity firms to build the fund of the future, to invest in a data lakehouse. And we will finally see private equity firms spend money on their own fund operations to mimic what the public markets have been doing for years and the hedge funds have been doing for years now. So I think this is the year we finally see private equity firms start to get value in their data.
And why do you think this is the year of that? Why is it finally the year? Is the technology finally there, or does it have something to do with the fact that they have to return the money to LPs? What's the deal breaker?
The reason why private equity firms, my prediction here that there will finally be the year in 2025 is it's now on the CEO's agenda of their fund. The LPs are getting smarter and gathering data themselves, and the private equity firms need an edge in this deal environment to source deals, to become efficient in their back office, and ultimately to create value, and most importantly, to create value in their portfolio companies.
Yeah, that makes sense. But anything about the tech though, too? Do you think that the tech is advanced enough? Do you think it's past sort of the experimentation phase and that private equity is comfortable with it now?
Private equity firms are comfortable. They've put in place AI governance. The models with OpenAI and competitors, people are now comfortable that the corpus of the internet and all the public data is now in these models, and they've been trained on these models. So now the models are going to be all about synthetic data and mini models. So I think the technology has advanced rapidly, and the cost structures are to a point where you can create an ROI. And there's creative capital and there's creative venture studios out there who are bringing unique innovation and ideas to make the initial investment with these portfolio companies bite-sized, where they can get a return and generate quick payback on these investments.
So Keith, there's a lot of anticipation around more private equity investment next year, given there was a lot of pent-up demand and interest rates going down, et cetera. Do you see the same acceleration happening next year?
In terms of acceleration of deal volumes, 2021 was the peak. It's been 3 years here of decline. We have optimism in our investment banking relationships, our private equity relationships, and our own sell-side advisory business, where we are seeing deals stack up for Q1, and the bankers are giddy. So we think that this environment between the interest rate cuts, the aging portfolio companies, and the amount of dry powder that's out there is that this is going to actually finally happen. We've been talking about it for years, but we think 2025 is the year.
Great. Thanks, Keith.
And now we have Peter McMurtry, who is with our insurance practice. Peter, please tell us about the industry that you lead here at West Monroe.
I'm Peter McMurtry. I am a partner in the insurance practice at West Monroe. I bring almost 30 years of industry experience working on the carrier side in a variety of C-suite roles across personal lines, commercial lines, and accident and health business. And here at West Monroe, I work with our carrier, broker, and insurance adjacent partners, helping them to transform their business, leveraging technology and data as a foundation.
So, Peter, what would you say is the biggest trend happening in this industry right now headed into 2025?
As we look at the insurance industry, the biggest trend we're seeing going into 2025 is really a lot of built up loss pressure on the industry. And it's a combination of increased and ongoing increased weather activity, still the residual effects of long-term inflation, and then this dynamic of social inflation, which is increased litigation activity and increased jury verdicts that are combining to put pressure on the overall profitability performance of insurance carriers. And it's been running for the last 2 years, and we're seeing it as we're exiting 24 and entering 25, that pressure is still built up in the system.
Peter, I'm curious if the election results impacted any of the trends that you're seeing in the insurance industry and what some of those impacts might be.
Yes, I think about the insurance industry and the impact of the election results. It's a little bit of uncertainty, and that in itself has an impact, because the insurance companies, we really look at two ways of making money. One is through an underwriting profit, and then the other is around investment income on those premium dollars during the hold period. With the uncertainty of sort of the economic outlook, are interest rates going to go up? Are interest rates going to continue to come down? That means that carriers are less able to rely on the consistency of that investment income return, and they really have to focus on underwriting profits to ensure their performance. So that uncertainty creates nervousness, which at times can cause companies to restrict investments or pull back on certain activities while they're waiting to get better clarity on what tomorrow is going to bring.
Yeah, that is really interesting. Okay, so Peter, the other question we have is, what is your biggest prediction for the industry for 2025?
Yeah, I'd say my biggest prediction for the industry is this need that you're going to see more investment in business transformation efforts throughout the industry. and it's to improve the quality of risk selection, the quality of pricing, the ability to reduce operating expenses. But it's also a recognition of customer demands are requiring a greater and greater level of personalization in their product offering, whether it's a commercial business that's expecting greater industry expertise out of their insurance partner, or it's a personal individual that is expecting their insurance carrier to know them and know how to meet their needs more effectively. I think you're going to see a need to invest more in that space. The risk is getting that right, because those pressures that I talked about still exist. And so you're going to see a desire to lean in. The challenge is going to be leaning in the right way and making precise investments and executing effectively. And I think we're going to sort of, my second big bet is we're going to see some winners, but we're also going to see some companies get it wrong pretty quickly. And you're going to see a bit of sort of polarization of industry performance.
Related to that prediction, are there any creative things that you've seen in the industry for solving some of those business transformation challenges, or ways that you've really helped clients specifically with that issue?
Yeah, I think, where we see the winners getting it right, and where we're working with our clients on getting it right, it is looking at this as intentional packaged solutions of execution. And, right now everybody's talking about AI, and everybody wants to say they have a Gen AI solution. Well, there's no prizes for being first to say, hey, we're doing something with Gen AI, as opposed to saying, here's how we have improved business performance through leveraging a Gen AI solution. But to get to that, you have to have the underlying data infrastructure right. You have to have well-defined processes, well-defined controls around how you're going to execute, and then having change management support to be able to adopt and get the benefit realization out of the solution. So we see the winners, they're thinking about the full continuum. Those that don't get it right, they're just simply trying to be first at saying they're doing something, but it's not creating actual value.
Thanks, Peter. Super interesting discussion. Appreciate you coming on the podcast. Next up, we have Larry Brisky from healthcare.
Hi, Larry. Welcome. Tell us about yourself and the industry that you lead here at West Monroe.
Larry Brisky. I'm a managing partner. I lead our healthcare sector at West Monroe. I've been in the healthcare industry for over 25 years. I've worked extensively at both payers and hospital systems.
So as you think about 2025, what do you think is the biggest issue facing the healthcare industry at large right now?
I think the largest issue facing the healthcare industry is balancing, optimizing cost and ensuring that operational efficiency is happening, while at the same time trying to determine where they need to invest in around growth, leveraging AI more effectively, and also counteracting cybersecurity threats that continue to really plague the industry.
Oh, that's interesting. Can you speak to how that might show up differently and maybe give some examples for, say, a health system versus a health plan?
Yeah, sure. So I think when you look at the payer industry, for instance, there's always going to be some headwinds around reimbursement rates. So Medicare has shifted the reimbursement rates. They've shifted the star ratings around health equity. And those changes really require payers to be more efficient and effective with their cost.
So Larry, what would you say that the winners in healthcare will get right in 2025? And then what will set them apart?
Yeah, I mean, the other big piece too, though, is the employer groups are demanding more and more from payers, which means their administrative expenses has to go down, right? So they're getting hit from reimbursement. They're also getting hit from the employers and the expectations of employer groups. So efficiency in operations is absolutely critical, and we're seeing that across the industry. So in the way that we're seeing it come up is looking at business cases that are driving efficiencies and then leveraging AI as a tool to then counteract and actually make some of that. And again, it's not about, and everybody thinks about AI is how do you take away from jobs? It's not about actually reducing jobs or anything like that. It's actually about how do you make the people that you have and the resources you have more efficient and effective at their job so they can start working on more value added activities. So the more we leverage AI and technology to automate the more mundane and to make things more efficient, the better off your workforce is and the better your overall administrative expenses become. And so we're seeing that across both payers and hospitals. Hospitals, as you've all seen in the news recently, they used to be at a place where nobody would target them. Right, that trend has completely dissipated. Hospitals are targets, and they're going to continue to be targets. And the unfortunate reality is that those hospitals that get targeted, they're in life and death situations. And so, cyber resiliency is going to be something that it has to be an investment opportunity for these hospitals. And it's not just about preventing attacks, because attacks are going to happen. Hospitals are going to be breached. It's also about understanding how quickly you can get your operations back up and running so you can create a safe environment for your patients, and how can you recover from those attacks most quickly. And those are the other types of investments that we're going to start to see in 2025, as opposed to just trying to prevent attacks.
Okay, last question. What is your big prediction for the healthcare industry next year?
My big prediction for the healthcare industry next year is the continued use of AI in all aspects in a very ethical way. And I keep pushing on an ethical way because it's going to be around not taking decisions out of human beings. It's going to be about creating supplemental information for human beings to do their jobs more efficiently and effectively. That's both on the payer side and on the hospital side. What we're not going to do and what you're not going to see next year is AI unleashed to make decisions on people's care and their health. We are not there as a society. I don't think the technology is there yet for us to be able to do that. It is all about garnering a supplemental information for humans to make better decisions, more effective decisions, so that we can provide better care for our patients.
Thanks so much, Larry. Appreciate you being here. Next up, we have Dhaval Mugamani from High Tech and Software.
Hi, Dhaval. Welcome. Tell me about yourself and the industry you lead here at West Monroe.
Hi, Liz. Hi, Christina. It's great to have this conversation. I'm Dhaval Mugamani. I'm a senior partner at West Monroe, and I lead our firm's High Tech and Software industry vertical. So that's the work we do for our clients, specifically clients that are in the enterprise software space, in the enterprise tech space, in companies that kind of drive tech-enabled services in the market, as well as our classic TMT type industry verticals.
Can you talk about the issues you see facing the high tech and software industry in 2025?
Of course, yeah. I think the industry has gone through some challenging times in the last, say, 12, 18 months. A combination of factors. There was a little bit of a hubris coming out of the COVID eras where people had overbought software, overbought tech. Certainly, the macroeconomic climate hasn't necessarily been favorable to the industry at large. The capital markets have been somewhat challenging as well. But we're seeing an uplift of the fog in many ways. If you think about the last 2 or 3 years, there's been a significant amount of focus in most of the technology companies around really driving efficiency within the organization. What we are seeing now, though, is the reality that you can't keep driving efficiency and drive valuation growth purely through efficiency improvements. And over the last, I'd say, 12 months or so, last 6 months or 8 months, you're seeing a significant amount of aperture shift to driving growth in a meaningful way. And that's still going to require, in the current context, it is not going to be growth at all costs like maybe we had a few years ago. It's going to be really a very focused and efficient growth within organizations. So what that translates to, what that means is, as companies are looking at their portfolio of products or the portfolio of markets that they actually focus on, it is going to be super targeted. There's going to be a lot of questions people are going to ask as to where are they going to make investments, in which products, in which teams, in which markets, and which domains. And so I think we'll see a lot of that discipline and focus continue in the market, but with the aperture towards driving growth. So that's certainly one area that we think will be important. And that translates to where companies are going to focus operationally within the organizations.
Dhaval, if you could name your one big prediction for the high tech and software industry for 2025, what would it be?
We'll see kind of an environment where deals will continue to will continue to flow. I mean, the economic environment is such where people have been on the sidelines for a while. Large tech companies have not really made a lot of transactions. IPO markets have been, stagnant. But I do think that in the next 12 months, we'll see a gradual release of that, of the capital markets opening up for tech, which I think drives a lot of downstream impact, right? So for what it's worth, the last 24 months, there's been significant venture investment, but companies are still struggling to raise money over time in terms of being able to kind of get the next round of capital. And so the idea would be, the opening of the capital markets should allow for a flow of the kind of innovators, existing companies, PE invested firms to essentially start to transact. And that will actually drive some winners and losers in the market, right? Right now, I think what's happening that there is a significant amount of just stagnancy, which I think will start to open up as the capital markets open up. Now, that's got to be balanced with, what's going to happen from a global uncertainty perspective. But at the end of the day, I do believe that there's going to be, it's going to open up the opening of the capital markets will, I think, create opportunities across the different stages of companies' life cycles, especially for tech.
Yeah, I think that's interesting. Movement will happen. We don't know where it's going to go, but it's definitely going to get unstuck.
Things will get unstuck. I think we've been in a period of stagnation to some degree, and I think that there will be an element of getting unstuck.
Coming up next, we have Randall Kenworthy representing the manufacturing sector.
Hi, Randall. Welcome to the podcast. Tell me about yourself and the industry you lead here at West Monroe.
Hi, I'm Randall Kenworthy. I'm a senior partner, and I'm the global lead for the consumer and industrial products practice.
Randall, heading into 2025, what would you say is the biggest trend or issue facing the manufacturing sector right now?
Yeah, the biggest issue in manufacturing right now is preparation for uncertainty. This has really become the new normal. Executives used to fear kind of the black swan event, but now they are just anticipating and expecting disruption, whether it's from geopolitical tensions, climate change effects, technology breakthroughs, or some of the supply chain vulnerabilities that we saw. We're expecting a 15 to 25% increase in the next 5 years in terms of disruption. So organizations just need to really plan around that. And the way that companies are looking to address that is through leveraging and finally adopting some of the capabilities that have been talked about since Hanover Messe in 2011 when the term Industry 4.0 was first coined. So why is Industry 4.0 at this inflection point? And it's really that AI has enabled Industry 4.0 to move up the S curve in the adoption, and that manufacturers now are at a point where they have to either innovate, accelerate, or fast follow around AI.
So, Randall, it would be really tough to talk about manufacturing in 2025 without talking about the event of 2024, which is the election. So arguably, this sector is the most impacted by the election results, especially with potential tariffs. Do tariffs and technology investment go hand in hand?
Well, I think what tariffs will drive two things. One would be driving more nearshoring of the operations. So there is planning and processing, planning being done to consider what do we do in the case of tariffs, how do we shift some of our manufacturing and supply to nearshore markets. So I think that would be kind of the key perspective is driving more nearshore production.
So Randall, in 2025, what would you say is your biggest prediction for the industry?
We are really so the biggest prediction for manufacturing 25 is going to be the adoption of Industry 4.0 in mid-market manufacturing, which I think is really actually exciting. There's historically been a big gap between enterprise Fortune 100 manufacturers and mid-market manufacturing. Just as an example, I recall going last year to a due diligence at a foundry or a steel manufacturer, and it really felt like I was stepping into the set of Peaky Blinders. And so for those that are not familiar with the show, it's stepping into a 1800s industrial manufacturing plant. and it would be descriptive or described as being manual processing and dirty, dangerous, and depressing. So there's been this really big gap between enterprise manufacturing and automation and adoption of Industry 4.0 and mid-market. But I see in 2025 an increasing adoption of Industry 4.0 in mid-market. And there's really 7 reasons for this. First is there's going to be a lot of dry powder coming off from the private equity firms. And so private equities have historically focused in mid-market. And so as we see more and more private equities moving into and investing in market, companies are going to have more capital allocation to take on and drive adoption. That coupled with some of the competitive pressures, I think the tariffs, although will be driving nearshoring, it's also going to be just driving overall competitive pressures. So companies are going to be looking to how do they differentiate. I think the access to technology has significantly come down. So the cost, capability of adopting some of the Industry 4.0 technologies has really come down. So that's making automation and digital solutions for mid-market manufacturing more palatable. The fourth driver of this will be labor shortages. And so as you're adopting Industry 4.0, there's really 2 parts of that. It's reducing your requirement on manual on manual labor, and we've seen labor shortages in manufacturing has been an issue for almost 20 years now. It's been a constant and ongoing. And so automation enables you, one, to reduce your dependency on manual processing. But the flip side of that, and kind of the silver lining on that, is it also makes it more attractive, though, as you move from a Peaky Blinders type of manufacturing environment to a highly automated technical environment. It increases the attractiveness of people coming into manufacturing. So it's kind of a dual benefit there from a labor challenges perspective. The fifth reason why we're going to see this trend is just around that demand for flexibility. As we were just talking about these disruptions that are coming through, that are coming from multiple forces, that's driving more flexibility, and that automation provides more flexibility. The sixth is just improved supply chain management. So we've got better integrated business planning that provides better visibility into the forecast and demand and enables you to better plan your production. And then the last, and hopefully, one of the last kind of key driver around this is that companies will maintain sustainability goals. I think there's going to be a higher reliance and dependency on sustainability at a private level. I don't think we're going to see a lot of investment around sustainability from a federal perspective, but certainly mid-market manufacturers recognize that sustainability is both good business as well as good for the planet. So I still think that there's going to be a drive around Industry 4.0 supporting sustainability goals, even if it's coming from industry for enterprise 100 companies that are pushing down some of their sustainability goals. The mid-market manufacturers will adopt it to improve their own performance.
Okay, thanks, Randall. So it's going to be an interesting year. Last but not least, we're welcoming Jordan Sternlieb from our financial services practice.
Okay, Jordan, welcome to the podcast. Please tell us about your role here at West Monroe.
Good morning, Christina. So I'm Jordan Sternlieb. I have responsibility for our banking practice at West Monroe nationally, and I also lead our LA office.
All right, Jordan, what would you say is the biggest issue facing the banking or financial services industry right now headed into 2025?
Yeah, so Christina, it's a great question. I'm glad you asked about kind of what the biggest thing impacting banks going into next year will be. I still think the biggest thing for banks is that they are behind from a digital transformation perspective. And I know, it's a little bit of a buzzword in terms of what digital transformation is, but let me explain a little bit about it. I still think banks have a long way to go in terms of delivering the best possible experience for their customers. And it needs to be digital first, but always, a human element as well. So let me tell you a little bit about what I mean by that? I think banks are going to fundamentally need to deliver differently in the future than they do right now. Banks are underutilizing their data. Banks aren't investing enough in automation and that customer experience ultimately. And I think that's something that is going to need to change. I think we're going to look back on this time in 2030, looking back on these 5 years of being a very pivotal time in the banking space, where those banks that really invest in those types of experiences for the future and the way they operate are going to be the ones that are able to compete and win, and the ones that don't are going to be left behind.
Jordan, why do you think that this is the year that's really going to separate the winners from the pack? Is it AI? Is it the coming age of AI? Is it new regulations?
Yeah, looking ahead at 2025, I think those of us in the banking space are very optimistic that the conditions are better than they've been for a long time. And let me tell you what I mean by that, Christina. I think, there's probably three things that I'll maybe call out. I think number one is the interest rate environment. With that declining and interest rates going down, we're going to see more loan demand. We're going to see more opportunities for banks to have a little bit more money and a little bit more capital to invest back in their business. So I think we'll be in a great situation for that in 2025. Number two, I would say, is the regulatory environment. I think with the new administration, I think banks are anticipating an environment where it's going to be maybe a little bit easier to do business than it had been in the past. So I think banks are optimistic about that environment as well. And then number three, I think, Christina, like what you were saying before and alluding to around AI and the technology advances that we're seeing, I think 2025 is going to be a big year for banks to really, again, as they start to maybe invest a little bit more back in their business and in projects after some more challenging years. I think banks are really going to begin to take advantage of some of the more advanced technologies that are out there that literally, while banks have maybe been challenged here over the last couple of years, so many things have changed, frankly, from a technology perspective that banks are going to really be able to take advantage of now.
Yeah, I think that makes sense. So tell me then, what might your biggest prediction for the industry be then in 2025?
Yeah, I think it's going to be a great year. I think I alluded to this earlier. The conditions are ripe for a really strong year for banks next year. I think you saw it here in the last few weeks where we've had some bank stocks in early November kind of spiked up. I think just the conditions in the macro environment are much better than they have been in the past. So I think 2025 is going to be a really great year for banks for a lot of reasons. I think in terms of growth for banks that are out there, both organically and inorganically. I think we're going to see some more M&A activity in 2025. I think we're already starting to see that here in 2024. So I think there's going to be some interesting things happening again in the M&A market where banks are going to grow that way. Like I said a little bit earlier, loan demand I expect to continue to get stronger and stronger. I don't think we're seeing it quite yet. But it's gonna be out there in 2025. So I expect it to be a really, really banner year for banks after, again, a few years of some hiccups and challenges, I would say.
And from what we've been reading, a lot of companies are getting more comfortable with that level of uncertainty or tension in the world. They can no longer wait to invest or reinvest in their business. There's going to be a point at which you have to start moving again. And I think that's what I'm hearing from you is that will be good for banks, right?
Yeah, no, I think that's totally right. I think we're seeing the same thing in the banking industry as maybe we're seeing in the private equity M&A world and high tech and software. We're all human, and so we see what's going on in the world, and we're impacted by that. There's uncertainty, in Eastern Europe and the Middle East, and we had an election. Unless you're living under a rock, there's all kinds of things going on in the world. And the more you think about it, the more it does create a little bit of uncertainty. But I think as you look forward, there's a little bit of, and I hate to say it this way, but a little bit of a new normal, a little bit of an acceptance of kind of what we're dealing with in terms of the macroeconomic world conditions. But from a business perspective, I think there's a lot to be excited about. And I do think, as you put it, Christina, I think banks, along with other businesses, are going to be unstuck going into next year, and I think we've got the right conditions to have that happen.
It will be interesting to see what happens. All right, Liz. Well, that was a marathon talking to all of those leaders. It was interesting to hear from all of them. I think something that really stood out to me was there's this sense that things are about to get unstuck, and across a lot of different industries. I know that we talked about it with Davil from High Tech and Software, who literally said movement will happen. But Paul also from Energy and Utilities talked about the fundamental shift to clean energy. Keith talked about this in private equity too, discussing, I think he talked about how AI might finally break through some traditional barriers. It's almost like each industry is primed for some kind of movement.
Yeah, it feels like they're all primed for reinvestment specifically. And everyone we talked about AI showing up so differently across all the sectors. In healthcare, Larry discussed AI's potential to transform patient care and operational efficiency. And yet in high tech, Davil really saw it as a growth enabler. And Peter from insurance was looking at AI as a way to solve complex business transformation challenges. So lots of different use cases for how AI is going to transform each industry we talked about.
Yeah, and something that we talk a lot about, and as you know, at West Monroe, is how technology is never just about the tech itself, right? It's about the people. It's about enabling operational improvements. It's tech for tech's sake is never worth that investment, right? And so, for instance, I think Randall talked about manufacturing using technology to create that operational flexibility, right? To really be able to withstand so much potential change in that industry. As a strategic response to potential disruption, tariffs, cybersecurity threats, and there were other industries I'm pretty sure that applied to as well. I think insurance was another, using it to sort of predict things and create some operational flexibility that they needed as well.
Exactly. I mean, whether it's financial services adapting to new economic landscapes, or as you mentioned, insurance companies really reimagining their business models, the real magic happens when technology meets that human-centric solution. So it's not about replacing people, but empowering them to solve more complex problems.
Yeah, it's always interesting and fun seeing where all the trends kind of meet together and to see what common threads there are across the industries. But it is also interesting to see how different things can be from industry to industry as well. It's also really fun to talk to all the really smart people that we have here at West Monroe and to share them out with the world. That's a really fun thing that we get to do here on this podcast. So listeners, thanks for sticking with us as we dove into our 7 core industries. And again, if you want to go even deeper, our full industry outlook reports are on our website at westmonroe.com/2025 outlooks. You can download each of them today. These conversations do barely scratch the surface of what is included in each one of those. Each one of those do cover the industry pretty in depth in terms of what trends we are expecting to see in each of those industries in 2025. And we will see what happens. Liz, thanks so much for being with me on this episode. It was fun.
Thanks, Christina. That was fun.
Thanks for listening to This is Digital. If you enjoyed today's show, please follow or subscribe on your preferred podcast app. And don't forget to leave us a review. For more information on This is Digital, visit westmonroe.com/thisisdigital.